Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon and welcome. You're watching the Mutual Fund Corner. I'm Mangla Malu. With me is Nigel D'Souza. This is Tuesday. Every Tuesday and Thursday, remember, we answer all your mutual fund queries, equip you to create wealth by benefiting from the magic of compounding. A day ahead of the Independence Day, this is the show where we get you financial independence. Be in touch with our top financial advisors who analyze your portfolio and provide recommendations. As we do that, it's a good day for our markets after a down day yesterday. The Nifty is recaptured close to that 11,450 mark, virtually at the high point of the day for all the indices as we speak. The Nifty, be it the Nifty Bank, the Nifty Private Bank, actually, that one's at the high point of the day. The mid-cap index too, in fact, as we speak, sitting with a gain of about 120 points. 275 on the Sensex. So far, so good for our markets. Exclusive flashes on the screen right now. JSW Steel has offered the highest bid for Bhushan Power and Steel. We will try getting Ritu for that in the meanwhile. But as we connect with her, first up, all the top headlines that we're tracking.
Get straight to that big exclusive on your screen. Remember, this is very, very important information. As Manglam was just running through the headlines, remember the big overhang on Tata Steel really was, in fact, if they go ahead and if they bid very, very aggressively. Now, we're going to get you those, those details very, very closely. The few stocks we'll be focusing on is JSW Steel as well as Tata Steel. I'll tell you why the big overhang on Tata Steel will be off if in case they don't go for this Bhushan Power and Steel asset. And I think we should get the intraday chart of Tata Steel. More than JSW Steel, you get the intraday chart of Tata Steel up for you on the screen. That stock is seeing a bit of a recovery, and we'll tell you just now why exactly. This is good news for them. But let's first address the cnbc TV 18 exclusive. Sources say that in fact JSW Steel, they have emerged as the highest bidder for Bhushan Power. Ritu is bringing us all those exclusive details. Ritu, fill us in.
Well, Nigel, that's right. There's a twist in the tail. In the first round of bids, it was Tata Steel that was declared the highest bidder. But in the second round, as it turns out, today the bids have been opened and JSW Steel has revised its offer once again and now stands as the highest bidder for Bhushan Power and Steel. Remember, the original bid it had placed was 11,000 crore rupees payment to lenders, which then increased to 18,000 crore rupees. And yesterday, JSW revised this bid, as we understand, to 19,700 crore rupees. This is far higher than the other two bidders because you remember, both of the, Tata Steel as well as Liberty House resubmitted their bids yesterday, but they have not been changed from what both the companies had originally offered. So Tata Steel's bid stands at about 17,000 crore rupees and Liberty House at 18,500 crore rupees. It is important to note that lenders are very clear they do not want to consider the Liberty House bid because the company has still not been able to show any source of funds. But as far as JSW Steel is concerned, they have the backing of State Bank of India, which has backed them up with a line of credit to make this acquisition. So yes, it looks like JSW Steel is the clear favorite as of now. But as we've seen in most other IBC cases, there is a possibility of this again going into litigation with Tata Steel challenging this order. But of course, whether or not they do that will depend on what the next hearing at the NCLAT says, which is scheduled on the 17th of August, and lenders will place the details of all bids that they have now received before the court.
All right, Ritu, hang in there. In the meanwhile, we are seeing some moves come by on most of the stocks. JSW Steel should come up for you. Tata Steel, that one too has taken off after that bit of intraday dip, so closer to the higher end of today's range. Nigel, what does this mean for all the stocks and what are brokerages saying of this? I
was just discussing this point with Anu just this morning itself. If Tata Steel comes off the high point of the day, it will be more on the back of this news. Whether or not they're going to go ahead and be very, very aggressive with Tata Steel. The ideal situation for the market would be if Tata Steel is happy with Bhushan Steel and they're not going to go ahead and say, no, I want, Bhushan Power and Steel. I just went through a few brokerages. CLSC, for instance, Mangalam, they said that aggressive bidding for Bhushan Power or any other steel assets, that's a risk. So clearly CLSC in today's note, they're saying that in fact, this is the overhang. IDFC as well, they said it will be positive for Tata Steel if in fact they do not acquire Bhushan Power. Jeffries, they say uncertainty over Bhushan Power, that in fact is an overhang out there. So all these brokerages, they were saying that this was an overhang on Tata Steel. Now, if you're evaluating this particular deal, and if in case, 19,000 crores, 19,700 crores, keep in mind there'll be some capex as well that you'll be adding to that. So in terms of an enterprise value, it'll work out to more than 25,000 crores odd. Investec, they had come out with the note today. They as well said, yes, this is an overhang for Tata Steel. But if you're looking at JSW Steel and you're saying, you know, that stock has come off the high point of the day, why is that? Because if you're just giving it a number, you know, giving the EBITDA number of around 3,000 crores approximately, and then in fact, if you're saying that the EV is around 25,000 crores or more than that, then in fact, the deal works out to around 8.5 times odd. And that's why I think, you know, JSW Steel has come off the high point of the day. Short point, the street doesn't want any of these two to go ahead and bid too aggressively for this asset. But the screen is telling you that, you know, they're not too happy with the fact, and that's why JSW has come off. But in fact, Tata Steel, that's moving higher. This was the overhang. And if, you know, this plays out in this manner, then in fact, you know, it'll be good news for Tata Steel shareholders, because Bhushan Steel is ramping up well. And they said, just be happy with what you have right now. Don't go ahead. Don't be too aggressive. You always have that ghost of, you know, chorus, you know, irrespective.
Overpaying for any acquisition.
Yeah, exactly. Exactly.
All right. So overpaying for the acquisition was the big fear. And as we understand, JSW Steel's bid has topped that of Tata Steel. Tata Steel shareholders rejoice the fact that they are not overpaying. And JSW Steel, on the other hand, is at the low point of the...
First coming through from Grasim this time around. Standalone revenue a tad higher actually than our own poll. And of course, the profit number too looking good in the stock. It looks like, actually, I don't know if I'm not wrong, it's off of the highs, but still about 1% higher. Anyway, let's get started with the mutual fund corner. Let's address some queries. Feroze Azeez of Anand Rathi Private Wealth Management is with us. Feroze, good afternoon to you. And our first query is through with us already. Mr. Mukund Deshpande has called in from Mumbai. Hi, Mr. Deshpande. How can we help you, sir?
Good afternoon.
Good afternoon.
My query is...
Go ahead.
Yes, sir. Go ahead.
I want to invest about 50 to 70,000 for about a year in a liquid fund. Please advise me a good liquid fund which will give us good returns. And
okay.
you know,
Mr. Deshpande, allow me to interrupt you for just 1 second, sir. I'm going to come back to your question in a bit. We have the margin number coming through for Grasim, and I think Mangalam, it's a substantial improvement actually operationally. And look at that, the stock is now up over 1%. It's getting charged up, and 1,000 crores plus on EBITDA. That's looking good as well.
Yep, I was just calculating that as well. The ticker team has put it out, 1,054 crores on the EBITDA. That would mean a margin upwards of 20%. There is a higher other income component as well, which is aiding the bottom line. But operationally, the numbers look like they are above estimates. Remember, for Grasim, it is important to watch the standalone numbers, because consolidation would mean it has numbers from Idea as well as Ultratech too. So the standalone numbers for Grasim looks like it is a fair beat as far as our poll is concerned, primarily on the operational front, and that explains the sort of spike that we've seen on the stock. 1,054 crores on the EBITDA, 4,000 plus crores on the revenue. That means margins upwards of 20%, which is above our estimates.
Yeah, actually, you know, it'll be interesting to also look out for some of the commentary from the management regarding pricing, demand, etc. Also the outlook on the chemical business as well as VSF. So we'll wait by for that. But for now, at least the standalone numbers looking good. Margins at 22%. All right, we were answering Mr. Deshpande's query, and I think he's looking to make some fresh investment. Sir, go ahead. What was your question?
I wish to invest about 50 to 70,000 in a liquid fund, which will give me a sound returns. I don't want any shaky returns, or I want a safe investment.
Absolutely. So, Feroze, Mr. Deshpande is retired. He's looking to put some money in a liquid fund. Mr. Deshpande, just one query from my end. Do you have any particular use for this fund? At the end of this 1 year period, is there something that you want to use these funds for?
No, right now I feel the horizon is 1 year, which may be extended for about 6 months more.
Okay, okay. So basically, Feroze, the overlying concern remains that the money must remain safe, and the investor is unwilling to take undue risk. Therefore, would you advise that a liquid fund is the way to go?
Yes, I have a question for Mr. Deshpande. What tax bracket do you fall in? Do you fall in the highest tax bracket, or you don't? Because like you said, you're retired. So it could be that you're in the lower tax bracket. So what would it be?
Yes, it is in 10%.
in 10%. So precisely, if you were in the higher tax bracket, an arbitrage fund would have been more appropriate for you. Since you're in the lower tax bracket, use a liquid fund, which is a good strategy. But importantly, use a growth option. If you use a dividend option in a liquid fund, you will have a dividend distribution tax, which is significantly more than your tax slab. So growth option, liquid fund is the way to go. In that, if I recommend you a liquid fund, because liquid funds have a very small dispersion from one vis-a-vis the other. So you can take most of the liquid funds, but if you took an HDFC liquid fund, which is a reasonably well-managed liquid fund, your range of returns would be very narrow, and I don't think it'll leave you with any surprises at the end. Withdraw your money anytime after 15 days in portions or in full. So it's a very good vehicle for a person in the lowest tax bracket.
All right, I hope that answers your question, sir. With that, we have Mr. Rajiv Makan calling us from New Delhi. Rajiv, what's your query?
Yes, hi. Good afternoon, CNBC team. Thank you so much. First of all, happy Independence Day to all my colleagues and friends there in CNBC team. And I'm really very fond of your, all your programs, and really very informative, and you really guide us very well, first of all. Thank you so much for this.
Thanks a lot, Mr. Makan, for watching us.
Yeah. Thank
Go
you.
ahead with your query.
Yeah. My query is that, I work for a United Nations agency here in Delhi, and I have now 10 years to retire. And I have two queries. One is that I want to start SIP, and with 10 to 15,000 per month. And I would like to know which mutual funds I should invest for, because I recently heard that there is some problem with small caps or something, and there was also a news that recently there is a huge reduction of inputs on mutual funds. So is it still okay to go ahead with this SIP plan, and how much I should be expecting in, say, 10 years upon my retirement, if I invest for 15,000 per month? I am medically covered, as well as income tax is exempted on our salary, and I have the term insurance also already.
All right, so that's quite some homework that you've done on your financials, Mr. Makan. But from a 10-year perspective, I'm not sure if, the near-term flows into the mutual funds as well as near-term volatility would impact you. But we'll pose this question to our expert. Feroze, 10 to 15,000 rupees per month. He does not get taxed. He has medical as well as life coverage. So sky's the limit for him. He has a 10-year horizon.
Absolutely. I think it's very good, Mr. Makan, that you have laid down a lot of important nitty-gritties of your finances. Fortunately, you are very well covered both on the life side and the health insurance side. I think it's very important for all viewers to take note that covering this risk, if not covered by your employer, is critical. Then if you move on to your mutual fund investment and the two specific points which you highlighted, mutual fund flows, in fact, that will actually be an advantage, because mutual fund flows in India over the long run are going to substantially increase as the effort in terms of educating new investors is going up. Secondly, I think you rightly identified that mid caps and small caps are not at the peak like the large cap index Nifty is. So it's in fact a better time to start a mutual fund investment, because the NAVs of these mutual funds are lower than what they were back in January. So good, appropriate time to start, especially when you're doing a systematic investment plan. The volatility will actually work in your favor rather than against you. Let me give you three very good funds, in my opinion, which are not just contemporary but also have a futuristic outlook on them. Mirai Asset India Equity Fund, very well managed fund. Nilesh Surana is the fund manager. 58 stocks, 84% of that money is in large cap stocks, and about smaller portion in the mid cap stock. Will have a stable NAV, and you can expect about 13 to 15% return. Of course, some degree of market support will be needed, but it has consistently beaten the market, and I think it will continue to do so. So that's one fund on the large cap side. Again, on the multi cap side, which gives the flexibility, the fund manager will be Kotak Standard Multi-Cap. Harsh Upadhyay, very well managed fund, 67 stocks in it, almost about 80% in large cap today, and does good top-down stock picking. So that's your second fund. And the last one, HDFC Mid-Cap Opportunities, of course a very large fund, which is a deterrent, but Chirag Setalvad has definitely proved his mettle, even after managing a large fund, and it's a very well diversified mid-cap portfolio with great earnings to back it up with.
All right, so that's the advice on where fresh investments can be initiated. HTIL, the stock has spiked. Look at that. It's a 10% up move in a matter of seconds once the numbers came out. The top line looks to have doubled this time around. Even on an EBITDA level, there is expansion, and the profit figure looking extremely good at close to that 25 crore odd mark. But another query comes in from Rajesh Shahi. He's written to us on Facebook. He says he has an SIP of about 1,000 rupees each in the Kotak Select Focus Fund, where he has the direct as well as the growth option, and the Axis Multi-Cap Fund. Likewise, he has the direct as well as the growth option. He wants to know if he should look for another large cap SIP to augment his portfolio. So, Feroze, it looks like Mr. Shahi is looking to make another investment. He already has two funds, and I think both funds, correct me if I'm wrong, but have been decent performers. Should he just put this extra money here, or should he look for a third fund?
I think he should look for a third fund. In the fund category, especially when you're looking at mid caps, could be a good addition at these beaten down levels, because there's a disparity between the large cap and mid cap. Last calendar year, mid caps outperformed the large cap peers by almost about 20%, and that's exactly what has got reversed in this calendar year. So you should use this opportunity to build your portfolio on that side. So Canara Robeco Emerging Equities is a very good fund, in my opinion, which has a robust mid cap portfolio. It will complement the rest of your portfolio very well. So that's the addition which I would suggest.
Okay, I think we also have another query that has come in. In fact, on Facebook, somebody is just writing in to us. Sagar Gandhi. Okay, Sagar, I also hope you're listening in. Wants to know about the banking funds. He says they've been quite volatile in terms of performance and also in proportion to the Sensex fluctuation, and wants to know how should they end up for investors. Okay, so I think the question is a little bit confusing, but basically he wants to know about sectoral funds, which is banking, and he wants to know what you think of the current time, rather, for being an investor in these funds.
See, I think like Sagar has correctly pointed out, there's sector funds. Of course, banking looks interesting, but two things which you have to keep in mind is, one, banking is a core sector. It's not a satellite sector. Most of the funds which you buy on the diversified category have anywhere between 25 to 40% exposure in the same sector, which you would be wanting to buy separately. So if you so did it, then you would be double doing the same exposure, and your exposure towards this high beta, as they call it, very volatile sector, would be enormously large, and that will make your portfolio more risky. As long as the reward is commensurate, risk is great. But
Feroze, just hold on to that thought. Apologies for interrupting you. Sun Pharma, 982 crores in terms of a net profit. That's a little ahead of actually what we were expecting. So our own poll was about 931, but it was expected that they would pretty much be along these lines. So 982 crores looks good. 7224. That's ahead of our estimate. So we had expected a growth of about 12-13% but I think the number comes in closer to the 20% mark. So that looks good, because it's better than what the street was expecting, which was about low double digit. This would come in on the higher end. In terms of EBITDA, the expectation is that the growth would be closer to 40%. So I'm just waiting for that number to come in.
EBITDA, I got 1,607 crores, so I will just confirm it with the ticker team as well once they flash. But 1,607 is what my calculation was, and compare that to 7,224 on the top line would mean that the company has posted margins of around 22.2%. We'll be joined by Ekta as well. Ekta, 7224 crores on the top line, closer to 22% in the margins. What would you say?
Yes, actually, it's looking like a very good set of numbers for Sun Pharma. It's in fact beat on all counts in terms of what we were expecting. So like you mentioned, net profit has come in at around 982 odd crores. Now, remember that same time last year, there was a one-off which had been incurred. So optically, obviously, that also looks very good in terms of a profit versus a loss. But separately, the street was expecting them to do over 930 odd crores or thereabout in terms of a profit. And the larger, or the range that we were working with in terms of an upper estimate in terms of profits was 970 odd crores. So if you compare this figure of 982 odd crores, it's definitely even beat the highest expectations that were on the street. Now, In terms of the revenue, that too has come above expectations. It's over a 14 to 15% growth easily, which has come through. What I mean by that is that the street was estimating up to a 14% growth. So again, it's beat that parameter in terms of growth, but and the margin too has come in at the higher end of estimates. So on all three counts, which is basically EBITDA as well as revenue as well as profit, it seems as though Sun Pharma has definitely delivered this quarter, and the margins have sustained quarter on quarter as well. Last quarter margins were 24%. This quarter they've delivered at 22%. So that sort of sustainability above 20% too will bode well for Sun Pharma. So overall, very good set of numbers which have come in for Sun Pharma in terms of the expectations that the street had. We have a couple of reactions coming through. We have Purvi Shah joining in to talk about the numbers. Purvi, your first thoughts?
Yeah, the numbers are more or less in line with what the street is expecting. So obviously, that's being cheered. The key thing now looks at that we look forward to is the commentary from the management. And since they have been quite confident in the last quarter's call that they'll be doing better numbers as Halol is back on track. So we expect that here on.
So Purvi, what was your expectation in terms of the margins?
I was expecting we were expecting around 21.5%. We were actually expecting a flattish to a little degrowth in the US business around. So I think we were expecting a little lower margins. But I think it's yes.
So what do you expect in terms of geographies based on what you've seen?
India was supposed to drive the growth basically because we've seen for most of the pharma companies, India has been very robust growth on account of the last quarter having GST disruption. So India was supposed to be like more than 15 to 18% of a growth. US we were expecting flattish to marginal degrowth of 2 or 3%. So I would be waiting out for the detailed numbers so that we could know what has actually led the growth.
What was your Okay, Purvi, just hold that thought. We have Prakash Diwan joining in to discuss the numbers as well. Prakash, very good set of numbers which is coming for Sun Pharma this quarter.
No, so that's quite. We've all been waiting how many quarters now, and more importantly, if the product mix and the distribution across geographies is encouraging, then that means that this could probably be the start of a slightly more medium-term trend and not just one-offs.
We can actually see the stock spiking up to around 4% odd. So obviously the street is much, happier with the numbers in terms of at least what was expected. But commentary, obviously, Prakash, would be most important for Sun Pharma when they want to, talk about Halol and the specialty product pipeline. What exactly are you looking to hear from this evening the most from the management?
So essentially, it's going to be, post remediation, whatever products that they have, successfully been able to start marketing, and then, how aggressively can they kind of ramp up that particular pipeline. Because the single biggest factor that brought them down or pulled them back has been the competitive intensity and lack of pricing power. So if there is some semblance of that coming back, and then, the last con call also, we did get some indication from Dr. Sakti that yes, things could probably start looking up from the Halol facility. So now it's more of the market acceptance and the products, especially the slightly larger market size products, which would be more keenly awaited. So if that commentary is positive, definitely you could probably expect some at least the next 2-3 quarters to be much positive.
Okay. All right, Prakash and Purvi, thanks very much for joining in and giving us your perspective on Sun Pharma. In fact, you can see that the stock is reacting very well to its set of numbers. So the P&L looks good, and we will wait by for the geographies and the press release from the company in terms of breaking up what exactly they've done this quarter. Plus, also, most importantly, we will be looking forward to the commentary that takes place from the management this evening at 6:30 p.m. to know what exactly the outlook for the markets would be, especially US, India, and the specialty product pipeline, not to mention what the Halol launch pipeline is looking like. So that's the update coming in on Sun Pharma.
Ekta, thanks very much for that. So Sun Pharma at the highs of trade, but we'll wrap up on the show. Feroze, thanks very much for joining in to advise our viewers. Remember to